Good morning. For Traders Exclusive, this is George Tkaczuk with RC Wealth Advisors reporting to you from the CME Group trading floor in Chicago. Well, Happy New Year, everybody. And here we are. Let's talk about the equity markets. Okay, equity markets a little bit scary. One of the things I want to talk about why it's important to focus on price. So last week, some pretty bad news out of the Middle East caused the market gap down last Friday. And market pretty much bounced back. I mean, the news was pretty terrible, and then furthermore, we got some more bad economic news on the ISM manufacturing number contracting for the fourth month in a row, showing contraction, came in at about 47. But the point is, the market was pretty resilient. Didn't really get killed, and the market got every excuse after running about 30% up for the year to implode right in the beginning of the year, and it didn't. And if you look at a lot of leading stocks, they continued to act well. We didn't see that getting hit. Now again, this morning too, have a little bit of a gap down, but right as we speak, the market's firming up, especially the technology sector is doing very well. A lot of software enterprise stocks that were under pressure are doing well. Stocks like Coupa Software, COUP, hitting new highs. The trade dex trying to break out. The symbol's TTD or Shopify has been forming a handle. I believe it's kind of moving to new highs just as we speak. That symbol's SHOP. Not only is there trade recommendations, but just to show you the strength of the market, despite the extremely kind of like negative news, makes it hard to almost focus, makes you very nervous, makes you just want to sell and get out of the market. But if you look at individual stocks, see how they're acting, tells you that the market's still actually pretty good and there's demand for shares. Now, what would change my mind? Well, if we start seeing a lot of these stocks break down, specifically the FANG stocks, we start seeing a breakdown in stocks like Apple or Microsoft or Facebook, then it tells you something. And if we look at the indices, if we start seeing breakdowns, say in the NASDAQ, the S&P. So for the NASDAQ, it's about at 9,000. If it starts getting below 88.64, that's a 20-day moving average. That'd be your first signal. Maybe the market's going to come under some selling pressure. And if it gets lower to the 50-day moving average, I forget exactly where that number is, then you get a little bit nervous. On the S&P 500, 20 days at about $3,200. If it starts getting below there, that might tell you the market's going to get some selling pressure. And if we get to about 3130, it's a 50-day moving average, that also may tell you the market's coming in pressure. And the Dow, we're looking at 28,000. So as long as the indices stay above these levels, we expect some pullbacks along the way. Markets should do well. And also individual stocks. Let always price and volume be your guide. That will tell you no matter how bad the headlines are. Now, of course, if you're a futures trader, you're trading the headlines. But if you're in the trading individual stocks and like the cash market, you do want to take a look at what the price and volume's telling you. You got to almost ignore the news and just look at the price of individual stocks, the leading stocks that are doing, and then also at the indices. So as always, that price and volume be your guide. This is George Tkaczuk, we're RC Wealth Advisors, reporting to you from the CME Group trading floor in Chicago. Have a great, happy trading new year.